Good morning, traders. Welcome back to another week of trading. Today is Monday, December the 5th, 2022. This is our weekly trading preview and market analyses. So taking a look at the week, I've said this over and over again. I know it seems like it's just a reoccurring theme, but I think that this week is no different than some of the other weeks that we've been talking about this. We are at some really crucial levels, some support resistance levels in the marketplace that I think are going to determine not only our next sort of chop zone or trading area that we'll be working in, but also the directional bias of the market coming up here very soon. So let's jump in. Let's take a look at some of the things that we look at in our live trading room on a week in and week out basis. We do look at a lot of technical indicators. We use about 12 different technical indicators and a dual overlay of moving averages all the way from 5 days out to 200 days. But we usually do that on a daily basis inside of our trading room. This week, we generally look at a weekly viewpoint, and that gives us just a little bit of a bigger sort of bird's eye view of what the market is doing. We're obviously still in a very strong buy mode. The market has been pushing up quite strongly for some time now. We've got a big pivot point, and again, this is on the EMinis. This is on the futures contract that we're using around that 40.40 to 40.35 area. That's going to be, I think, a big demarcation point today as we start to look at the marketplace. I'm looking at the futures right now, and we are sitting just a little bit slightly to the negative as we get started on the morning, down almost 19 points around that 40.56 level. Be interesting to see if this pivot point area comes into play today. We do have some sell signals and some overbought signals in place, but generally it's a pretty bullish overall view of the marketplace. We look at some of the key support and resistance levels, and again, we like to use the futures contracts to have the continuity there. You can see both our point of control and our VWAP. We're above both of those. You can also see that 200-day moving average right here. We've been able to break up above that. Now, since Thursday of last week, that's December 1st, we've had a little bit of an actual downtrend going on here. We'll have to see if it can build any momentum. That 200-day moving average, as you always know, you can see going back historically, that 200-day moving average really does become a very big line in the sand, if you will. It's a big demarcation point, and it's not easy for the market to break above or below it. And once it does, it usually becomes a pretty substantive support or resistance line, as the case may be. So it will be very telling, I think, this week to see if we can get back below that 200-day moving average. We're very close to it now, as again, we're looking at, probably an hour and a half before the market open here on Monday morning, down almost 20 points on the E-minis. If we pull in a little bit closer here and look at a 2-hour candlestick, I think you can again sort of see that sort of a downtrend. Boy, that's not much of a downtrend, but it is a little bit of a drift to the downside there starting on the 1st. That would be last Thursday, December the 1st. And again, pushing on a very important level as we sit right now around this 40.57 level. This has been, I think, a really critical level. Going back further on the chart, we only have the two-hour chart on here right now, but if we were to go back further, you'd see that again as a very important demarcation point. Obviously, also, we're starting now to try to cut into this massive push that we had after Powell's speech last week. Some of the critical levels here, and I've got them denoted here in Fibonacci lines, but some of the critical levels, I think, for me, as I look at this week. Number one, I would say some major levels. Okay, so there's some major levels that I'm looking at, and that's really the 4,100 level on the upside and the 3,960 on the downside. This is what I would call our new chop zone, or our new trading area that we have developed really since that Powell speech was given. And we've been stuck in this area now ever since then. So that's really the first thing that I'm looking for, is to see if we can get a definitive break out of that 4,100 down to 3,960 area. That'll be the first step in, I think, developing a new trend in the marketplace. We've got this 4067 level that is right up in here, and that's our pivot point right now in the marketplace, that 4067 level. So that would be an important level for me as well, 4067. Sort of a magnet area for the market right now, our pivot point. And then, of course, our 200-day moving average on the EMinis is right around 40.44. That would be our 200-day moving average. Again, that's on the futures contract. So all of these levels, I think, are going to be critical for us here in terms of looking at a bigger overall picture as we draw down to getting this week started and looking at where we're at for today's price action. There's a couple things that I, again, will point out. I think, number one, from maybe a bullish standpoint, so this would be for the bulls right here. 4066 is an important level. We're sitting very, very close to that again right now. As I am watching the markets develop, we're down about, again, 20 points at 40.55. So this would be the first step right here, getting above 40.66 for the bulls today. Above that is 40.86. And then above that, of course, is the big one, and that's 4,100. 4,100 would be the big one for the bulls today. If they could break up above that, then we're right back into just a full-on bullish mode. For the bears today, the numbers that I would be looking at would be 40.55, which incidentally is pretty much exactly to the penny where we are sitting right now. So breaking below 40.55, that's a big one. That's a big one right there for the bears today. If they can hold 40.55 and stay below that, they might have a shot of getting down to 40.37, and below that 40.23. Below that comes the 4,005 level, and now at 4,005 we're starting to cut right back in here to that Powell speech, and we're starting to retrace that big move. And the bears would really, below 4,005, start to have a shot at getting back into the game. So again, I know I say this every week, but very, very pivotal points that we're focusing on for this week's price action. We look at the major indices that we look at, the SPYs, the Qs, the IWMs, the diamonds. You can see that again across the board, although it doesn't feel like it with the price action that we've had for the last little bit. Sure doesn't feel like we're in still a bearish trend, but the overall trend is still bearish. However, you can see that the diamonds have been absolutely the strongest, just outlier here. We're up against some pretty big resistance here. This is going back until November of last year. So this is a pretty darn big area right in here that we're at right now. And I do see a little bit of stalling taking place here in the diamond. So even though it has been just a stalwart outperforming index relative to everything else that we look at, you see a little bit of stalling taking place there. Interest rate sensitive small caps, the IWM, as interest rates have sort of moderated a little bit here. You see it's trying to break up above that trend line as well that it has been stuck at going back really to May of this year. In fact, you can see it's actually was working as support in January of this year when we really started to lose the momentum of last year's bull market. That's kind of where it came down and landed. So again, both the IWMs and the DIAs have really been pushing, but I think they are pushing up against some resistance right now. So again, just a big, important demarcation point for most of the major indices that we look at right now. They can continue this trend upward. I think we do get back to a bullish stance. And if they fail here, well, then of course the overall trend stays intact, and that's a bearish trend. We look at earnings for this week, and there's a few earnings coming out this week that I'm maybe interested in taking a look at. It's always interesting to see what GameStop is going to do. I also am interested in DocuSign as well. Costco and Oracle are interesting names to always take a look at. So there's a couple of interesting earnings plays that you might want to put on your book. Toll Brothers on Wednesday also is interesting. Real estate has had a little bit of a nice rebound over the last few weeks. It'll be interesting to see what their numbers look like. As we look at the overall sector performance for this last week, you can see that really it was the communication services sector. This is an area that I'm looking at right now, potentially getting some short positions built in. Not really quite there yet in terms of a reversion to the mean trade, at least I believe. But anytime you've got a sector that's up 5% in a week, it's usually something that jumps onto my radar in terms of something that might be pressed a little bit too much one way or the other. So I've got that on my list to watch for this week as well, communication services. We look at the news announcements for this week. We do have some things coming out this week that I think the market is sort of waiting on as we get into the Fed meeting for the last time this year. And I think all of us are wanting to see a little bit more data on the economy to try to get an idea. We're up to almost a 91% projection right now that the Fed only bumps interest rates 50 basis points in this next move, this last move of the year. I don't know if that's going to be the case or not. And I think it will be interesting to see what our PMI numbers and factory orders are on Monday. We've got trade numbers coming out on Tuesday. The BOC rate decision as well as crude oil on Wednesday. And then big thing probably is going to be jobless claims and consumer spending on Thursday. So there will be a few items that we want to keep our eyes on as we are building our trades this week and just being aware of those things. We look at the heat map from a weekly basis. This is a weekly heat map. This is 2 weeks ago right here, and then this is last week's. You can see pretty much across the board fairly healthy in an overall bullish stance. It's kind of what you want to see. You don't want to see everything green and you don't want to see everything red. That's not really a healthy trend. This is a pretty healthy trend right now. So we'll, again, see how that continues. Again, you see from 2 weeks ago here, our major indices versus last week. The Qs really had an outstanding week last week. But for one of the very first times here, we're starting to see that the diamonds are starting to lag a little bit. And that's something that's important for us because we have quite a few ladder trades going on with the diamonds. And our call side's been getting pressure for the last several weeks here, even though we've been, I think, doing an admirable job of staying ahead of it by rolling them out and up and out and up. At some point, this is what we were looking for here, was a little bit of moderation in the diamonds versus what the other sectors are doing. And again, I will just make a pitch here. We have unique trading strategies. We have a unique strategy right here for the SPYs and the Qs. We have a unique strategy that we trade with the IWM, and we do have a unique strategy that we trade with the diamonds. We always recommend that you trade all of those because you can see there is quite a big differential between each one of these indices in terms of how they perform over time. And there is diversification in trading multiple indices simultaneously. We look at the put-call ratio. That gives us an idea of sort of where everybody is at in terms of market sentiment. And it looked like for a little bit there this past week, before Powell gave that speech, it looked like we were going to get a little bit of bearishness coming into the marketplace. Man, that got sucked right out of the market here this past week. We're right back down to a number below 1. So you look at things like expected moves. We do have a little bit of a higher expected move this week, but there's still very low expected moves. We look at the fear and greed index, and we're still up here sort of pegged in this greed area, and it's just getting higher and higher. So there's a lot of complacency that's come into this marketplace. One of the things that's done, of course, is drive the VIX down to a really, really low level. And we actually have one trade going on inside of our trading room right now, or a model portfolio that is looking to set us up to be long volatility here. Just basically a wheel trade on the VIX. And again, I think that the motto does bear thinking about as you are out there putting your trades together. That old saying that when the VIX is high, it's time to buy, and when the VIX is low, it's time to go. I think it's always good, when we are very complacent in the market, to look at maybe getting long a little bit of volatility in your portfolio. Can definitely balance out that risk inside of what you're trading. We look at the open interest levels, and we've seen a pretty big shift this week. And you know what? The shift has been to the downside. So just a couple of areas that I'll make note of in terms of open interest. We already talked about these really in terms of my levels on the E-mini. But the 4100 level, that's a big demarcation point. That would be a critical level for the bulls. If they wanted to continue this party to the upside, they're going to need to push through that open interest level at 4100. The 4055 area, I've talked about that as really coming into play several times over the last couple of weeks, but specifically today, we look at, again, the market right now, we're down 23 points at 4052. This is a big demarcation point, I think, right here. This 4055 level, I think if the bears can push down and stay below that, you might have a shot at getting down to this 4005 level that I also referenced. Yeah, there's quite a bit of open interest right there at that 4,000 to 4,010 level. It's a big area right there. And I think you really do get maybe sort of the all clear for the bears if they could break through all of those all of that call activity that you see right there. So can they do it? Well, we'll certainly see. I think, again, the fact that we are sitting right now here today, Monday morning, prior to the cash markets open, and we're sitting at this very important demarcation point of about 4055. I think that's going to mean that we're going to get some movement today. We might get some price action to work off of. So we'll see. But that's our overall view for the trading week this week, folks. I hope you have a good trading week. We've got a lot on our schedule this week. If you're a member of our trading room, make sure and check in with my morning post every morning. And that will go through the planned trades that we have on the agenda. Of course, today being Monday, that's a start to our week. That's usually one of our busiest days as well. So as always, let me know if you have any questions. Hope all of you have a really great trading week. Take care.